Hello traders, the title of the video is Lane Trade FX and US dollar Mexican peso using Pitchfork tool and Fibonacci. Alright, let's get started. We want to keep it very short. The first point that we want to choose is the low, yes, it is the low of May 2011. That's the candlestick bar here on my monthly chart. And then we select the high of November 2011 and the low of May 2013 with those 3 points. All right, we draw our Pitchfork tool for traders that are very new, beginners who do not know how to use Pitchfork tool. Go to www.dayprotrader.com and learn to use the Pitchfork tool. So we have our Pitchfork tool on our chart, that's there. And as you can see now, this US dollar Mexican peso is now retesting the edge of the Pitchfork tool. This is a hot spot trading zone. Why? Because any intersection of any horizontal line and the Pitchfork tool, any part of the Pitchfork tool is a hot spot trading zone. Price now at a hot spot trading zone, and people are buying now. But there is also a resistance in the zone at 18319. 18319. So there's a resistance here. So if you are not already in this trade, you want to buy, give prior to bullish signal above 18319 and prior to bear signal below it. We are now on the edge of the Pitchfork tool. So you see here, price went now from here, 2011, all the way here in 2016. Now it start pulling back. Okay, it was confined in the Pitchfork tool before because the Pitchfork tool allow us to determine the possible path that the price will take. You can see that the price stay within the Pitchfork tool all this time here. Now it's on the edge of it. This is a hot spot trading zone. Look for trading setup at a hot spot trading zone. If it's going up, all right, where is it going? We'll apply Fibonacci retracement from the price action. Pay attention. From here, which is the month of May 2016, okay, to the month of January 2017. So from here to here, we apply Fibonacci retracement, either to the closing price or from the low to the high, and we highlight the zone between the 50% and the 61.8% Fibonacci retracement. So that's the zone here where I put the green spot. So if you breaks above that level of 18319 and start going up, watch out for this zone between the 50% and 61.8% Fibonacci retracement of the price action from here to here. So that will bring us to the edge of the median line of the Pitchfork tools. Here we are combining the Pitchfork tool and the Fibonacci retracement to trade the US dollar Mexican peso. All right. So traders who do not know the epic is USDMXN. Okay, USD Mike X-ray November. Okay, US dollar Mexican peso. I was talking to Area Wave Trader. I will be posting a video at the 24 Area Wave YouTube channel where we'll be analyzing the same currency pair using the Area Wave principle. All right, so this is it. If we come to the edge of the median line and start going down, watch out for that pink key level, which I already mentioned, and the edge of the Pitchfork tool right here. So that will be the first support. If it start coming down, if it reaches the edge of the median line, start coming down, watch out for this zone, which is another hot spot trading zone. Why? Because it's another intersection between this part of the Pitchfork tool and that pink trend line, that one here. First one was here, hot spot trading zone, another hot spot trading zone here. If it breaks below that level of 18319, all right, start going down, all right, we'll watch the zone between 16772 and the level of 15496. So what is this zone here? It is the zone of the 50% and the 61.8% Fibonacci retracement of the price action from here, beginning of the trend, where my cursor is, to the top of the trend. So we apply Fibonacci retracement from the beginning of the trend to the end of the trend, and we highlight the 50%, 61.8% Fibonacci retracement level. This is the zone here, all right, right here, and this is again another hot spot trading zone. Why? Because if you draw a trend line here connecting the low of May 2013 and the low of June 2014, this low and this low here, connecting this low and this low here, we have a red trend line. Can you see on my chart? Draw it also in your chart. You can see that we have intersection of that red trend line and another key level here. Therefore, we have a hot spot trading zone in the sweet spot zone. All right. So draw the 50% Fibonacci retracement level from the beginning of the trend to the top of the trend, the 61.8%. This is a sweet spot trading zone. Draw also that trend line. We have a hot spot trading zone in a sweet Fibonacci trading zone. All right. So if it start going up from where it is now, or if you receive a bullish signal above, or a bullish trend, if you find a bullish trend setup above 18319, or even in this zone, next level we want to watch is the median line here. If you start coming down, be aware of the edge here. If you continue to go down, there are other key levels which I don't want to talk about along the way before we reach the zone of 50%, 51.8% Fibonacci retracement level from here to here. You can see that the Pitchfork tool was quite useful. The price was confined in that channel, in that Pitchfork tool, all right? It stayed within the boundaries of the Pitchfork tool. It's still within it now, all right? So first reaction probably to that point, and then down. Will it do exactly that? No. It may do it, it may not do it. It may print something out, which we can break above this level and continue to go up. If it's going up more, watch the level of 21082. So what am I talking about? We are using Fibonacci retracement and a Pitchfork tool, all right, to determine the possible, okay, reversal point where we can find a high probability trading setup. Once we see a valid trading setup, we will now implement a multiple time frame trading method to trade it like a pro. Do not just buy or sell in that zone, or do not assume that the price will do exactly what we are expecting. In all cases, we follow the trading drill. Is there a trading setup? Yes. If there is a trading setup, what is the next step? Use a top-down trading method to trade it. What are we trading? We are trading the US dollar, a Mexican peso. It's a currency pair. If you are trading currency, we must go to Forex Factory to check the economy news, because the economy news will affect, okay, our technical analysis. The first week of the month, on the 1st to the 8th, very often we have a high impact economy news, especially the first Friday of the month. So next week is the beginning of a new month. It's quite challenging to trade Forex. I say it all the time. Traders will be following us know it already, but I'm saying it to new traders. All right. So this is about lane trade, FX and US dollar, Mexican peso, using Pitchfork tool and Fibonacci. I want to tell traders that this currency is quite friendly to trade. All right. But timing, is the market environment good? All right. Is it the best time to trade? You are day trading. First 2 hours when London, New York, or all right, Hong Kong is open. Okay, and take it one step at a time. If the signal fell, just come out. So this will conclude our discussion today about lane trade, FX and US Mexican peso using Pitchfork tool and Fibonacci. Happy to meet you all and speak to you soon. We are the HTW24 traders. Happy to meet you all and speak to you soon.